Good morning, guys. I hope you had a wonderful trading session. That was yesterday. Welcome to today's market snapshot series. And I'll be taking you through, we'll be covering what we did yesterday. That is what the pairs we looked at and what to anticipate today and tomorrow, considering we have news up to 9 a.m. tomorrow. So getting to the charts. Yesterday, we talked about gold. The first chart was on gold and Euro USD. So these are the charts that we can begin to look at today. So I'll start with gold. There was some news that we were expecting. Okay, if you can hear me also, just say hi on the charts. If you can hear me clearly. In the meantime, let's go to the calendar. Yeah, so yesterday we had quite a lot happening. Actually, this was on Monday. Actually, today is when you have quite a lot. But yesterday we had two key events. Number one was Lagarde speaking, and then the Empire State Manufacturing Index. Now, remember what we said yesterday, that we are looking for signs of a slowing down economy. And in this case, the actual reading came in higher than expected. And this meant that the economy is not as slowing down. Hi, everyone. I think I'm saying hi, yeah. So this means that the economy wasn't as slowing down as expected. So it kind of breaks the narrative. And this meant that the dollar became a bit stronger. So we did see strength in the dollar. And if you were to go back to the charts, both for gold and for Euro USD, over here, we have marked ESM index is Monday. So this was Monday, this was Friday. So we were expecting, if the news comes in weaker than expected, to hit the previous highs up here, but that wasn't the case. It came in stronger than expected, and hence we had a drop down. In Euro USD, the drop was much clearer. So this was yesterday's movement. As you can see, today we are having some recovery. We are expecting more news coming in the week, but the sentiment is still mixed, because remember, we had these readings coming in weak, and now we have a bit of some strength or indicators of strength. So that shows there is some mixed news in the market. So people will be looking for more information or for more data so as to know where next to take the market. However, Euro USD is still in a channel. So if I was to zoom out, you can see we are still in this upwards trending channel. And we might have, at the moment, we seem to be filling up this imbalance. Remember, when the market moves sharply in one direction, usually it tends to come back and fill the imbalance. So you might see the imbalance filling up and then us trending sideways as we wait for the week's events. Same case with gold. We dropped below the 2000 level. This was yesterday, which I think was a good trading day for a lot of days. We dropped below the 2000 level, and we are still trying to see, look for more data as to where we're going to head next. Lastly, we looked at NASDAQ, which also corrected. And if you see NASDAQ doing such things where you're having negative news, it's bouncing off but quickly recovering. So NASDAQ is a US tech. So this is UT100. If you see NASDAQ quickly recovering from negative news as such, so from CPI to PPI, it came back and recovered, and yesterday it came back and recovered, then there is a high likelihood that we have a lot of bullish momentum building up for NASDAQ. But that is, we're yet to see how this is going to unfold during the day. So today we have Canadian news coming out. Let me go back to the charts. We have Canadian news coming out. So this is Tuesday. So the most important items will be these ones that I've highlighted over here. So you have CPI, we have median CPI, trim CPI, common CPI, and the speech at 6. The most important one, or the one that the Bank of Canada looks at, is the median CPI. So this is a key figure that we will be looking at for today. So just a bit of background on that. We know that the Bank of Canada had decided to pause hikes at 4.5%. So that tells you that the inflation data coming in might not necessarily change what they said, because it was barely a month ago. So this reading might not necessarily have a big impact on the markets, because it might not have a big impact on what the Bank of Canada is thinking. So if you come to this over here, yeah, so there are other price pressures to USD CAD. That includes oil prices. So if you see higher oil prices, that's when we'll expect to know whether price is going to go up or whether CAD is going to strengthen or not. But the inflation reading today might merely be a blimp. So if I was to go back to the charts and show you what the previous reaction was like, you can see that. So if I was to go to the USD CAD chart, so this was when the Bank of Canada announced the interest rates, that they're going to keep them on hold, and we had this downtrend. The last time we had the CPI reading here, we just had USD CAD maintaining its range. So usually when you look at news events, such as today's event, you'd want to measure first the impact on the market. And by the impact, it means going to the news announcement. For example, in this case, I'll go to Forex Factory because it has a very nice history. So I'll go to Forex Factory like that. And then where it's written median CPI, I just expound on it like that. When you have this opening up, you can go to every debt here by clicking on it and seeing what was the reaction. So when you're comparing news impact reactions, you need to look at what the forecast is and what the actual is. The difference between these two should be mapped on the market. And that's when you see, does this news typically have a large impact on the market, or does it have a minor impact on the market? And most of the times, these news items in red do not necessarily affect the market, as has been shown here. So sometimes you just have to do your own research and see how it's going to go. Then yesterday we had a question about interest rate parity. And for that, we're going to look at a small formula for that. So someone asked about how it's going to affect currencies in the long run. So you're going to see, for example, we do know that these are the interest rates down here. We do know that Canada is planning to maintain 4.5 interest rates here. And we know that for the US, it's usually 5%. So if you have a simple interest rate parity formula, which is 5% interest rate for the US and 4.5% for Canada, you get an exchange rate of about 1.3372 USD CAD. If you go back to the chart over here, you can see that the exchange rate is right about 1.332, the same as the calculation. So we are hovering around the same price based on the interest rate parity formula, which will tell you that we are going to see probably a range within this area, or if there are high oil prices, then we might see USD weakening further against the Canadian dollar. One more thing to note is if we go to look at option orders, so this is usually a good way to benchmark what options markets are doing. So if you were to go to option expiry orders, we can see that there's an order at 1.365. of this size. So that can form a key area of resistance, but I don't think we'll get to that level anytime soon. So in that case, if you're planning on trading USD card, chances are we're going to have a small impact on CPI. So it's usually for a lot of traders to trade reversals when there's such reactions, because the impact on the market is close to negligible, unless there is some crazy reading that comes out. So in this case, we have an order at 1.365 for that much on the options market. And then other than that, there's nothing, there's not a strong reason to argue for the trend going higher unless USD comes significantly higher. Please pull back the interest rate parity. So interest rate parity it's just a simple formula for, let me go back to that. It's just a simple formula. It doesn't really hold, it works well in theory if you're into economics, but it doesn't really hold a lot. That's why it's barely used, but it's a simple formula. You just take the current exchange rate. So this is the current rate. And then you take the interest rate of the home country, which is this one, interest rate of home. So in this case, it's the US, and then interest rate of the sorry. Let me undo this. Of the foreign country. So in that case, we'll have interest rate of, I'll just say F. Yeah. And then, so you take your current exchange rate times the interest rate of the home country divided by the interest rate of the foreign country. That will give you a forward rate. In this case, the forward rate is a 1-year rate from now, which is currently where we are hovering about. So this is 1.3372, which is right about there. So we're going to range there unless we have either a stronger dollar or higher oil prices, which are going to push the trend downwards. So I believe that answers the question for interest rate parity. Yeah, so other than that, tomorrow we have, let's see. Yeah, so that's it with the USD card. For pound, tomorrow morning, I believe the news will have already come out. So we'll have CPI reading at 9 a.m. And that's when the UK data will be coming in. So a lot of the times when you're interpreting this news, you're interpreting it from a secondary perspective. If inflation is high, what is the central bank of that country going to do? And in this case, again, if you are to go to that, you have this. So this snippet over here. So it's simply saying they are confident that inflation is coming down in the long run. This is the Bank of England, that is, for the pound inflation reading. So they are confident that in the long run, rates are coming down, so they don't need to hike as much. So they'll be comfortable with keeping rates at 4.25. This is the Bank of England. So in this case also, this is how you measure if the reading is going to have a high impact on the market or not. It's based on what are the central banks thinking. And if they don't really think it will have a material impact, then the impact might also be minimal for that. So this is what we have for tomorrow. So we'll just go back to the pound chart to see how that is. Okay, yeah, so this is the pound chart. So I'll just zoom this out. That. Okay, so for the pound, I think we can do the analysis for this over here. So I'll just put a level over here and the previous high where we are. So currently for pound, we seem very, we seem like we're in a range. So in this case, we have the previous high being here and we have this bottom being here. So again, the impact might not be very high. So we'd expect us remaining in this range, and most of the news is going to be coming from the dollar. So we expect this range to continue until we see stronger signs of dollar strength or a very ridiculous news on inflation. Otherwise, that's it for today. With regards to the market analysis, of course, you can be keeping an eye on gold. Since we are still in a channel, we just come to this. Yeah, since you're still in a channel, you can be keeping an eye on gold. If it breaks lower, in this case, if we have a breakout lower at this point going down. Okay. So if we break below this channel, then that might create some good selling opportunities. There is very little reason for it to go higher. Although in a bullish case, then you'll be looking for a break above the previous high to confirm that indeed you're going higher than the current price. So in this case, I'll be looking for that and towards our level of supply. Remember, this is where we started falling off from the market or selling off. So if in the event we have a bullish breakout at this point, then the target will be where we sold off the previous time, and that was here. So I'll be looking to see an extension all the way to the top half of this channel at this point. Otherwise, a more likely scenario will be bearish. A break beyond this point will confirm that. And then we have Euro USD at this point. Again, at the moment, it seems on the 4-hour time frame, we are heading to the previous sell-off zone or the previous supply zone, which was this point. So I'll just mark this level out. Yeah. Yeah. So it seems as though we're heading back here. If we are at all to be bullish, then we need to break this point and be sure that the market is holding above this level, and then our next target will be here. Otherwise, looks like a very bearish scenario to me, and I'll be looking to see if we can have a change of structure back to the bottom of this channel. Any questions? Any comments? Any more questions? I believe that's it. Tomorrow, we apart from the CPI, we'll be looking for the Fed comments. So for Thursday, that is, from Walla. And then from then, see how the rest of the week goes. Yeah, other than that, thanks for attending. Tomorrow, we have a session in the evening tomorrow and also in the morning. So you can attend those. We can discuss more and have a happy hunting day.